Joining us now is Dan Geltrude, CPA and business analyst. Dan, great to have you here with us today. 2 days of Jerome Powell speaking. Now, all but confirmed that we're going to have a rate cut this month. What were your main takeaways, and were you surprised by anything Jay Powell said?
I really wasn't surprised. I mean, I think he pointed out a lot of what we already see going on in the market and what we see going on globally. We already know, for example, that we have an issue right now with the trade war with China. He expressed that as a concern. We already know that we have a global slowdown economically. We already know that. It was interesting, though, that he started to get into this discussion about inflation, or lack thereof, being a problem, that it's lagging behind. Now, I personally don't see that as much of a concern as he was expressing it, as far as the basis for lowering rates. I don't agree with him making that move right now. I think the issues that we see in the economy globally are not something that we have to be overly concerned about right now.
I think back to December, which is the last time we got a rate rise, right? The market was falling out of bed then. We had the worst December since the Great Depression. And now the stock market is at record highs, and we're going to cut rates. It just almost does not make sense. So explain the timing and whether or not you think it was the right move actually to raise rates back in December.
I don't think it was the right move. And as a matter of fact, when Jerome Powell did that at the time, I said that that was a rookie mistake that he made. He overreacted, and since that point in time, President Trump has not allowed him to forget it. He has been taking a browbeating from the president related to rates, and I think the president is in his head. I don't think the president is bullying him per se, but I think it's in the back of his mind, and he's keeping that in the forefront of what he's doing with rates right now. Again, I didn't agree with the rate increase then. I don't agree with the rate decrease now.
But to that point, aside from the word uncertainty, I think Jerome Powell used the word independence. We're an independent entity quite a bit during his testimony. Do you think that he's being influenced, even subconsciously, by President Trump's attacks on him?
Well, along that lines, it's very interesting, because when he was asked the question regarding the success of the economy, he was quick to point out how the Fed has done a great job, him and his predecessors. So that answer in itself was political in my mind. So I think it's very difficult, although it is an independent branch. I think it's really hard to be independent. How could he not be paying attention to what's going on politically, especially with someone like President Trump, who's always tweeting about something, and I'm sure he's not ignoring those tweets.
And we've gotten basically every indication of late that if the president does get reelected, the trade war is only going to ramp up and perhaps become more aggressive from here. That's 6 years, right, if he does get reelected. And so rates already at super low levels if we look back historically. The question for me is, what kind of padding does this add if they cut rates, but then for the next 6 years, the economic picture just worsens globally, and then they don't have a lot of runway to cut even further?
You're exactly right. I agree with that point. Not a lot of arrows in the quiver here if you're going to start cutting rates from this point going forward, and then President Trump in office for 6 years, potentially longer. And what happens if this trade war doesn't get resolved? The Fed has said they're going to back up that potential trade war with the use of interest rates. But where are we going to go? To zero? To negative? So I agree with you, Kristen, in that it is a problem, and I think it's an overreaction right now. Everything is going fine.
So what was also surprising to me this week is that we saw the banks rise, and this is despite several threats, right? Lower rates, which are not a positive for the banks, earnings, which are expected to fall for this current quarter by about 2.5%, and then in addition to that, Facebook announcing Libra. All three of those things not good for the banks, but we will get the reports starting next week. What are you anticipating from the banks, and how do they stay competitive in this environment?
It's going to be really difficult for the big banks. However, I do think because of the rising tide here, that all boats are going to be lifted. I do think that the big banks are going to do better than expected. It doesn't mean that they're going to be doing great. There is that interest compression that banks are suffering through between deposits and loans is a huge problem, and the lowering of rates only exacerbates that. So I think the big banks are in for a little bit of rough times going forward, but I think right now they're going to do okay. We'll have to see what happens.
Really quickly on Libra, since Facebook wants the Libra coin to become the de facto payment method around the world, how could this potentially impact the role of the central bank? Clearly a big theme in terms of questions for Jerome Powell the last couple days.
I think that cryptocurrencies and alternate currencies in general are a real threat to the Fed. I mean, there's a reason why these cryptocurrencies came into existence, and that's the mistrust of centralized government. So as we see this becoming a trade, I think Jerome Powell and others are right to have a concern over where these alternate currencies are going to go. It's a problem because of lack of oversight.
All right, Dan, thank you so much as always for your insight. Dan Geltrude is a CPA and business analyst.